harassed banks. Jack Ablin says get used to these kinds of losses. Meanwhile, what's even more concerning, he believes we are one headline away from disaster. He joins us now from Chicago. Also joining me is Lee Munson, who is a bit more positive. Lee says there's money to be made. You just need to know where to look. Good to have you both on the program. And we have to start out with these headlines out of the Federal Reserve. I don't know about you, Lee, but with the Federal Reserve saying, look, Fed officials see action if growth does not pick up soon, and we will make our decision to stimulate the economy further either next week or in September, you got to expect a rip-roaring rally here in the next couple of weeks. They're basically telling you we're going to act next week.
Well, I mean, it's, a month ago we were very concerned. Even I as a bull was concerned about these lousy unemployment numbers. Plus, before that announcement today, you notice that the Richmond Fed manufacturing survey stunk. And Maria, it didn't even have any silver lining. But we always knew that the Fed was willing to come in with $500 billion or more of money printing bond buying. So this is just the news that I need to be confident in my bullish posturing for the rest of the summer. I love it. I'm even holding some of my corporate bonds.
So you love it. Jack, why are you so bearish?
Well, I think, as you mentioned, I think the Eurozone is really one headline away from disaster. And I think the news out of Moody's on Germany really underscores it. It's a heads you lose, tails you lose scenario for Germany. Either they hold the euro together and have to pay dearly for it. I think we calculated more than 300% of GDP to hold it together, or they let the euro go and have to bail out their banks and essentially a disastrous level of debt. In either case, it's not a great scenario. I think the best case situation for Europe is they, continue to kick the can for another couple of years. But either case, it doesn't seem like there are that many avenues for that pathway of the euro.
But does the Fed sort of clear away some of that? I mean, we've got the news today that the Fed is saying that the Federal Reserve officials say they see action if growth does not pick up soon. Federal Reserve moving closer to action to spur growth. The Wall Street Journal reporting bond buying, rate guidance, lower reserve rate among Fed options. Fed could make key decisions next week or in September. This coming back 10 minutes to 4 o'clock, turning the whole market around, cutting the losses from down almost 200 to down 104. Does this play into it and change the scenario that you're putting forth right here, Jack?
It could. I mean, look, there are three levels. There are three ways to address the problem. There's rhetoric, and we've certainly heard a lot of rhetoric out of the Fed. There's monetary policy. They've tripled the size of their balance sheet from 2008 till today, or more. But then there's policy action, and we've seen little or none, both out of Europe and the United States. And eventually, capital markets are going to get tired of the monetary policy, as we've seen in Europe, and the Fed action isn't going to work anymore. But for right now, we've got the Bernanke put, and we're going to see it in the market.
Yeah, but we also have a lot of mitigating stuff. We've got China, though, and I think you have to remember that, I've spent the last 12 months being the sort of the sad sack talking about how China isn't growing, but it's coming off its base right now. And I think that we can't just say that Europe is going to be the only thing and that there's a single headline that's going to take us down. We're off the bottom. Metals are 30% off their last year's high. Shibor is going down for months. We have the actual yield curve in China, and Hong Kong stocks haven't been cheaper.
All right, we will leave it there. Thank you very much, gentlemen. We'll keep watching this important story. Thank you, Lee Munson. We appreciate your insights, and Jack Ablin.